Hey everybody, so this isn't one of my standard videos, but rather I'm going to be documenting a play that I've come across, and um, I really, I don't think I've ever come across an opportunity like this before, where I think it almost has zero chance of failing, and I'm going to document it and my thought process before this play falls through, and we're either gonna see how it turns out or how we learn from it. So the date today is August 11th, and it is currently 30 minutes after midnight. So we're just gonna jump right into it. So to start things off, the play is gonna be on Tesla, and this strategy is what you would call volatility arbitrage. So you're basically profiting off of underpriced volatility expectations. And that might sound just like a lot of words there, but essentially what's happening is Tesla has been consolidating for almost 3 months now. And as a result of that, one of the components in what makes up the prices of an option has fallen to substantially low levels, and that is what we're going to look at to, I guess, kind of like just show you the numbers of it. It's called the IV percentile. So this is Tesla. We're looking at the option statistics, and if you look here, right now the IV is in the fifth percentile. So 95% of the time, it is higher than this. So what this means is IV will be higher than this. At some point in the next few weeks or months, it will guaranteed be higher than 5%. Um, if you think about a distribution um, curve like that was kind of bad. Um, that was bad too. Something like this, and so this is your average right here, and these are your tail ends. And your tail ends is where it's very unlikely to get to these regions. And this is where we are right now. So we're sitting at the very tail end side. So we're going to see what's called mean reversion back to the mean, back to the middle of that range. So that is essentially what this whole play is revolving around. And the fact that it has been consolidating it and it's going to break out. So there's a few things I'm just going to say here. So there's two cases. First case, Tesla is going to move to 400 or higher. And if it enters a gamma squeeze, which is essentially where market makers are trying to stay delta neutral, and to stay delta neutral, they have to continue buying shares, which continue to push the price up. It's a lot of work, but basically, a market maker wants to stay delta neutral, um, which means um, they don't make any money if the price goes up or down. But if it moves too much, um, they start losing money, and they have to maintain delta neutrality by continuing to buy shares if it goes to the upside. So the higher it goes, you could be essentially what I'm trying to say is you could be looking at Tesla getting up into this very high region where it would be met by a lot of supply, but there's a chance Tesla could move up to the mid to high 400s. Now in the other scenario, we could see it move down to 200, the low 200s, and I think if this is the case, we're probably going to break support here and see a move even lower below 200, which is hitting major support, and you're also hitting the tail end of this basically a bell curve. Um, so I think we're going to see a push to either side of these extreme ends. Now, what I want to also show you is the visualization of the strategy. So I guess I haven't explained the strategy yet, but I'm going to be playing it both ways. So this is an option calculator, and essentially I'm buying calls and puts. And the way I make money is if it moves in either direction. And the only way I lose money is if it stays in this region. So if it doesn't break out, which that's just not how this pattern works, and that's not how Tesla behaves, and that's just not how the market behaves in general. The only way I would lose is if Tesla does this, and that's not what triangles do. And if you're familiar with Elliott wave theory, triangles can only happen in waves B and wave 4. And in this scenario, it's not possible to be a wave 4, So it's most likely wave B before C, and you can measure the target for wave C by using a Fibonacci extension and targeting the 100% extension, which is at over 420. So that's I'm not sure where I was going with that, but basically what I'm saying is either way this moves, it's going to be a gigantic move. And as you can see, if this position pushes into the high 400s, I will be looking at enormous gains in a matter of like months, and I'm going to want to be out of this, I think, before earnings. Maybe I'll hold some into earnings, but well, we just have to see how it plays out until then, because there's a lot of paths it could take. It could go this way, it could go this way, and then it could also break out and then come back down. It could fail around here and then switch sides. So there's a couple ways I'm preparing for this. So first off is um, I'm going to be so once Tesla is going to hit one of these areas at some point. It's not going to trade in this range forever, um, which you can also look at by um, so if you look up Bollinger Bands and Keltner Channel, this will show you when price is consolidating and really coiling up, and you can look at the past and compare it to when what happens after it's coiled up this tightly. And just from a glance, it never gets this tight, like ever, and especially for this long. So the last time I guess was right here, and this was I actually remember I played this breakout. Well, I played this breakout, so I didn't catch this move, but I did call out this entire move. We were above 400, and I was looking for 250. We went long here. I made, I think a little over 20,000. Shorted here, closed that short here, made 9,000 on that move, and I've just been waiting. And this is the next move on Tesla, which is going to be a bi-directional bet. So, I mean, yeah, every time it consolidates, you're looking at a move of like look at that. Just look for yourself. Consolidation, like an enormous move is coming, and I'm not sure which way it's gonna move. I think there's a high chance of it going up, but in this case, it's not gonna matter because I make money whichever way it goes, and that's kind of the beauty of this approach to this strategy. So if I'm targeting 400 with a $10,000 position with 3 puts and 8 call options, um, I mean, I'm looking at an unbelievable amount of money in a really short amount of time. And yeah, if we go to the downside, I'm looking at a couple thousand. And the thing here is the thing that I wasn't calculating when I originally was kind of calculating this play. So um, right now the IV is being underpriced. So right now, if you were to calculate it with a 0 change in IV, which that doesn't happen, that's not how options work, implied volatility is going to change. And because we're at the tail end of this, we're going to see a move back into this like median of this zone or this range that it usually trades between. So you're looking at anywhere between, I think the lowest increase we're going to see is 30%, and that also reduces the range it needs to break out of. And to the upper side, I think we could see upwards of 60 to 70%. So in that case, like, the risk is so unbelievably minimal, and if it somehow goes wrong and I mean the breakout's not working, um, I mean I'm looking at taking a loss of like a couple thousand compared to the substantial potential of profit. And just I've been trading Tesla for years, I've watched it for years, and just knowing how it behaves, when it moves big, and it usually doesn't do a fake like fake outs. So another way to visualize this is with I don't really know what the name for this is, strategy builder, option visualization, but it might look confusing, but basically this green and red here, so this is your break even right here, this gray line, and if you're below that you lose money, and if you're above that you make money, and this blue line here is pricing in IVs. So um, this is really the line that we're going to be looking at because IV is going to increase. So with um, the positioning that I have, if we get to 400, I'm looking at over 20,000, and if it dropped to 200, I'm looking at like 10,000, whatever this is, like 10, 15,000. So the only way I lose is if it doesn't break out of this range, and that's not how Tesla works. Um, when it consolidates this much, it moves a lot. So the main increases are going to be from IV spiking, and also in the down case scenario, IV increases higher to the downside, just because of investors panicking. So if it goes to the downside, it negates. Um, well, if you're doing a strangle, so in uneven amounts, so you have more calls than puts, and IV goes higher to the downside, that kind of equalizes out that strangle a little bit more, if that makes any sense. But um, yeah, and so for the hedging, so I showed you. So the main things I wanted to say were the range breakout. This is the whole concept of it. The IV percentile and the strangle calculator. The visualizations, which was this, and hedging. So in the one scenario that this goes wrong somehow, which I think what it would do is it would come above this region. So these lines are where the other side invalidates. So in a triangle, um, the formation is usually A, B, C, D, E, and then you break out. Um, so when you break the C, that invalidates the downside scenario, and when you break um, the D touch point, that's when the upside scenario invalidates. So the only way I think this goes wrong is if we break above, and then we come back in, and same thing with the downside, and we come back in. So what my approach is going to be is when we break this level, I'm going to add to my puts. So I will be making money on the call options, and it's going to outweigh the losses of the puts, but I'm also going to hedge for that potential drop back in by adding to my puts. So that's going to negate the potential of that one scenario that it fails this breakout somehow and moves back into the range, which I really don't think is possible, but you never know with these markets sometimes. So I think there is an extraordinary probability of this being successful. Um, I mean, everything is aligned for it to move. That's really all that matters. It only needs to go up or down, and it would make money, and a lot of money in this scenario. Um, so yeah, that's really all I have to say. Um, we'll see how this turns out in a couple weeks and months, and yeah.